In today's video we are going to study a rather advanced trade involving Newton's laws of motion and market manipulation. This scenario happened in the daily chart of the US dollar versus the Canadian dollar. Without further ado, let's begin the analysis to see if we can learn something with this chart. As you can see, I marked the numbers 1 through 6 in the chart to highlight some of the most important market extremes. The market seems to be in a clear movement to the upside, judging by the fact that important highs and lows are progressively higher, which is something that can only happen in an uptrend. From numbers 1 to number 4, this dynamic is left intact because there is no doubt about the fact that buyers are really surpassing the previous extreme they created. For example, number 4 is clearly higher than number 2. When one price vector breaks the previous market vector like that, we can have some degree of certainty about the strength of the market players that originated the last vector. In other words, we can have a good idea of how powerful buyers were by inferring the conviction with which they broke the last extreme produced by buyers. This is exactly what's happening between number 2 and number 4. All of this also means that low number 3 is the birthplace or starting point of the buyers who produced the price vector from number 3 to number 4. It's not exactly the absolute low number 3 that is the starting point, but the surroundings of number 3, which is a subject for another day. Since price creates certain patterns that tend to repeat in cycles, the same dynamics that we observed between number 2 and 4 is being cycled again in numbers 4 and 6. However, unlike the conviction of buyers we could observe in number 4, in number 6 we see a different behavior unfolding in the chart. Before talking about what happened in number 6, let me first grab your attention to a more general picture of what might be occurring. Look how the price vectors produced by buyers are progressively decreasing in size. The price vector between number 1 and number 2 was relatively large and full of biased intent to the upside. The vector from number 3 to number 4 was successful in breaking high number 2, but it certainly didn't have the same conviction as the previous vector made by buyers. If we look at the next vector from number 5 to number 6, the buyer's power seems to have decreased even more. This general picture leads us to think that even though we are in an uptrend, buyers are decelerating, and that implies that sellers are getting stronger. If we think about this in terms of physics, more specifically in terms of the conservation law, we will see that buyers are transferring their power to the sellers, so it's not unwise to assume that a reversal might be imminent. However, that's a general observation. We need more than that to actually have a trade idea. Going back to the high number 6, we can see that price is spiking the level of high number 4, and it is failing to break that level. This is where this scenario gets a little tricky because this is a classic manipulative maneuver, and yet there are a few elements missing in here. For example, it's not possible to see the von Riestorff effect in this last vector, unless we want to consider the large fractal bar at the beginning of the vector as the von Riestorff effect. We could do that, but it seems to be a bit of a stretch. Those two spikes in high number 6 are implying that there is an upward inertia in price due to the current uptrend, but as soon as price goes above the level of high number 4, sellers are beating it down to the level below number 4. That's almost like sellers telling buyers that they are not allowed above the level of high number 4. Those two upper tails that spiked high number 4 are the clues we have to infer all of that. Another interesting detail in here is that if we add a pitchfork using the two price vectors contained between number 3 and number 5, we will observe that the peculiar situation happening in high number 6 is meeting the center line of the pitchfork in question. This is interesting because this is far from being a random fork. It is grounded on two of the most important price vectors in this chart. The real question now is whether or not you can trust the buyers that came from number 5. Let's fast forward a few candles to see how the market responds. We can see that after high number 6, the volatility of the market increased, and sellers assumed the control of the market. The most important thing you have to notice in here is the fact that the vector after number 6 completely ignore the buyers in number 5, and the buyers in number 3, which were much stronger than the buyers in number 5. That's a clue that indicates the market has reset precisely in number 6. Now we have indication that sellers are really in control of this market, and we can start thinking about a trade idea based on that vague assumption. The next step would be finding some sort of intersection between tools to justify this whole narrative somehow. At this point it would be interesting to pay very close attention to see any sort of fractal candle to the downside because we would like to catch the next reversal down. If we find the fractal candle, we still need to verify it somehow using other types of lines and pitchforks, and this is where the idea of reverse engineering of market contexts contained in the Newtonian trading strategy comes into play. Before fast-forwarding price to look for fractal candles, let's draw the last meaningful pitchfork we can draw in a situation like this, which would be using number 4 to number 6 as the axes. Just by looking at the center line of the fork, there is an indication of where price might reverse if we take into account the small frequency found in the momentary stop of price right before it broke the low number 5. The small frequency seems to be correlating with the center line of the fork in the imminent future of price, so let's fast forward a little bit to see if price responds to that intersection. Now we see that price has created a fractal candle exactly in the double intersection between the center line of the fork and the small frequency and the minor momentary stop in the middle of the price vector starting from high number 6. We already have a double intersection of meaningful lines, and we have the appearance of a fractal candle, which would render this as a triple intersection. Here we can employ the reverse engineering idea and try to find more lines to justify this intersection. Reverse engineering means that we will try to look for lines that cross the intersection we already have. That's the best way to select lines among all the possibilities because after inferring lines from price vectors themselves, it can be useful to infer lines from intersections to make them stronger. The only line that crosses perfectly with the triple intersection we already have is the modified fork using the vector ignition before number 4 until low number 5. That's probably the only fork that will create a quadruple intersection in the point we have been talking about. This is all very suggestive of a short trade, but the reality of this situation is that the real stop loss for this trade is above high number 6 because that's where the sellers began this whole thing, and the problem is that high number 6 is a bit far away. You could play the high of the fractal candle as a stop, but that's an aggressive move, and I don't recommend that you do that frequently. Let's fast forward price to see if the context we found and the quadruple intersection of techniques will hold. As you can see, the general idea was correct and the quadruple intersection did its job. The only real problem in here would be the distance from the logical stop-loss order, and also the fact that most of the time you will wait for price to come up to the most effective supply and demand zone, which would be in the turning point line of high number 6. Sometimes price doesn't help and reverses early. Nonetheless, it should not be a problem if you have the correct stop-loss order. I hope you enjoyed this video. If you wish to support the channel, please visit the strategy store to learn these trading techniques in depth, click the like button, subscribe to the channel, activate the notifications button so you don't miss future uploads, and leave your feedback in the comment section. Thank you for watching and I hope to see you in the next video.